Hi guys, good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra Parekh. With me is Sonal Bhutra and you are tuned into Mutual Fund Corner. Today we're going to discuss a very interesting space within mutual funds, that is the small cap funds, because we've seen multi-year high inflows in FY23. In fact, if you take a look at the last month, that is March, we saw the highest ever inflow coming in as well. So Sonal, you've been looking at all of this data. Take us through the numbers. We know it's been, but take us through what the numbers have looked like.
Oh yes, FY23 really has been a remarkable year, right? For the small cap category, so to say, total inflows in small cap funds came in at 22,103 crore rupees. This is for, of course, the full year. And March saw the highest ever flows in this category. So let's take a look here first. First of all, there were no outflows in this category in FY23. All months saw inflows, which averaged anywhere between 1,300 crore rupees to around 2,400 crore rupees. April saw inflows of 17 crore rupees, which then stabilized around those levels, saw a sharp decline in the month of August, but then picked up from there. But come December, inflows surged to levels above 2,200 crore rupees, and that has been the trend for the last 4 months of FY23, which marked seeing highest inflows. Now, if we compare it with last 2 years, there has been a big jump. FY22 saw inflows of 10,144 crore rupees in FY22. That is, FY21 saw outflows of 3,035 crore rupees, and FY20 inflows were at 10,430 crore rupees. Look at the chart, definitely, it's a big jump here. Also, FY20 to FY21 did see outflows in some of the months in the small cap funds. FY20 was another year where all months saw positive flows in this category. Now, let's talk about folios being added in this category. Folios are unique numbers to keep track of your holdings. FY23 saw 11.3 crore folios being added in this fund. And from levels of 81 lakh in April 2022, folios saw constant increase and ended the year with March seeing addition of more than a crore. So, December to April 2023, number of additions were either 1 crore or more than that. If we compare it to previous years, FY23 saw 47% increase in folios if compared with FY22, and actually even before that, there has been a consistent increase from levels of 6 to 7 crore rupees. So definitely, there is more interest coming in the small cap space, and we'll keep tracking that for you as well.
Very interesting details there, Sonal, and the numbers definitely tell us that there is good, interest in this space. But I want to discuss this entire pocket of funds. Let's invite our guests on the show. We have Amol Joshi, who's founder at PlanRupee Investment Services, as Trideep Bhattacharya, CIO of Equities at Edelweiss AMC, to talk more about small cap funds. Gentlemen, good morning and thanks a lot for joining us. Mr. Bhattacharya, let me come to you first. We were just going through the numbers that Sonal put out. Extremely solid inflows. So first, for the most basic question, what do you think these flows have really been driven by? Is it the fact that the markets have been so sideways and are expected to be like that as well, that if you want to look for opportunities for generating good returns, you have to look at these pockets? Is that the reason? And then in that context, do you expect this kind of outperformance to continue as well?
So first of all, good afternoon, and thanks for inviting me to your show. I would say that, there's a good set of data that you talked about. From an investing standpoint, the way we think about small caps and the way I see small caps at the moment, there are two things that come about which is worth noticing. First of all, on a relative basis, whether you look at large, mid and small caps are looking a little attractive versus their growth expectations versus the mid and the large cap. So to put numbers here, Nifty would be at about 20 times 1 year forward earnings, whereas mid cap or small cap PE multiple would be about 15 times overall as an average. While when we look about investing, we sort of get into company specifics, but on an average, the bunch is looking relatively cheaper. The second aspect that I would say is, which I would agree with your earlier hypothesis, that in a sideline or sideways market, people look to areas where the growth potential could be strong going forward. And I think I would not probably say the entire small cap basket, but the small cap basket throws some very interesting opportunities, which are forward looking and which have strong growth prospects. Makes me believe that if somebody is looking to create stock specific alpha, it's a good category to be in from a medium term standpoint.
Okay, so valuations really working for small cap funds right now. Amol Joshi is also joining us. Same question to you, because we've seen that outperformance in a month where Nifty has not done much. What's the take going forward?
Right. As Trideep mentioned, Sonal, small cap funds or small cap category as such, if I talk about index small cap 250, Nifty small cap 250 index, it corrected about 28% from the all-time highs. And after that, since last month, it is kind of trending upwards. And as you rightly pointed out, this has made, kind of 5% jump in this month itself. I would say that valuation-wise, people are finding value, both investors and advisors alike are finding value in the small cap space. It also goes on to tell you the past returns. When this category did a 35% return in 2020, did a 60% kind of CAGR in 2021, percentage returns in a calendar year, and then it had a flat to negative year in 2022. Now, from this base, I think there is a good value in small caps over the next 3 to 5 years.
All right, got that. Amol, just one question for you, for the benefit of our viewers, if you could just take us through what the composition of a small cap fund should really look like when it comes to equity, as well as other components as well. You don't need to hold only 65% in small caps, really.
Pavitra, this is a very good question and deserves a detailed answer. In 2017, we all remember SEBI came out with scheme categorization guidelines. As per those guidelines, you should have essentially minimum 65% in small cap stocks. Now, the next question would be, what exactly are small cap stocks? So if you sort all the stocks available basis their full market cap, the 251st stock and onwards is the small cap universe. Basis that, minimum 65% in small cap, remaining 35% can be in mid caps or large caps, or some kind of cash component also that many funds do keep looking for opportunities or taking care of aspects depending on the situation that you are in.
Okay. Point taken, very helpful as well. Mr. Bhattacharya, let me come to you, because when investing in a small cap, what are fund managers looking at? What is the focus point here when it comes to small cap fund investing? Does it focus on growth stocks or value stocks, or is it a mix of both?
I think to answer your question in one shot, it will be a mix of both, but let me elaborate. I think the first thing that small cap investing, or the first point why small cap investing differs from large and mid cap investing, is this is the alpha center of the entire market. So the focal point from a small cap investing in that context is that, first of all, it is more bottom up than any other category, number one. Number two, I think we in India has always been a hotbed for entrepreneurs who are emerging on the emerging side. And hence, it is not too difficult to find a few stocks, a few companies which have dominant market positions, but in niche areas and still trading at reasonable valuations because they are not fully explored. So a mix of these along with valuations is what our focal point is from a small cap investing standpoint, and it's worked well for us.
All right, got that. Let's also now talk about what kind of investor really should invest in small cap funds. So Amol, let me come to you for that. What do you think? What is the kind of risk profile that someone needs to be looking at this category? Because while the returns can be quite solid, it is also a more high risk space, right?
So the returns are on the higher side, but at the same time, the risks are higher too. In the previous part, I mentioned that small cap index fell about 28%. But if you compare that with Nifty during the same period fell only about 18 to 19%. So you are essentially should be an investor who has a higher risk appetite as well as the long-term investment horizon. If I take a specific case of the largest small cap fund in the industry, it has got about AUM 24 to 25,000 crore rupees, and it's a pretty old fund too. If you do a rolling returns analysis, if you are an investor who has invested for any 3-year period, despite of staying invested for 3-year period, your returns were negative 9% at the lowest scale based on rolling returns. If you increase your horizon to 5 years, the returns improved. They went into a positive territory, but positive 1% only, even after staying for a 5-year period. Now, when you expand your horizon further to 7 years, that is when the real small cap alpha goes up. Then the minimum return potential on rolling return basis becomes 15%, and the average returns for a 7-year period becomes 21%. So this goes on to show that you should essentially be a long-term investor. You should be able to take the hits on the chin that you will get when the market is down, and you should stay put if your thesis, if your investment horizon, and if your risk appetite fits with the chosen small cap fund.
Okay, all right. Amol, that point taken. Mr. Bhattacharya, let me come to you. First, of course, we want to know what kind of risk profile does it suit when it comes to small cap investing? And is it something that a new investor should look at all? Is that something they should consider?
So my sense is that overall, the volatility on the small cap side, as the gentleman said, is on the higher side, and hence the risk appetite has to be slightly higher. And what the investor is essentially trying to do is a bit of time arbitrage. That if you stay invested for a longer period of time, the returns are higher. Generally, we find that when investors are new to markets, they are little kind of scary of volatility. And hence, this is probably not the first place to hunt for new funds if one were to be new to the equity markets. As I say, not for the faint-hearted, as he quoted the data that the annual decline in one of the years were about 28%. But having said that, on the other side, I would also highlight, as I said earlier also, that the small cap investing is the alpha corner of the Indian stock market. And hence, if somebody has to generate returns and the average market returns, then that is the place to be. Our own fund, for instance, generated somewhere around 500 to 600 basis points of alpha over the last 3 years. Now, this is historic alpha. This has got no bearing on future returns, and with all that caveat, but just a point to make that ultimately, when you're looking to do small cap investing, the main thing to look at is the capability of the investment manager, and then listen to the advice of the advisor before taking a call.
Oh, absolutely. I mean, like you said, that this is a space where you can see solid returns, but in that context, what the fund manager can do, how much trust you can put in the fund manager, all of that is very important as well. And this is a space, I mean, I guess you would...
Okay, all right. So we think that it's a technical issue, but of course, we've been talking about how it is for the seasoned investors as well. Mr. Bhattacharya, then I'll of course come to Amol as well. When it comes to that, apart from of course the return ratio, what are the other factors that an investor needs to consider before investing in small cap?
Right. So we...
Please. Yeah. Yes, Amol, please go ahead.
Right. So we fundamentally, we always advise investors to base their entire investments on three foundation parameters. First one is, what is your investment horizon, whether it is short term, medium term, long term. After that, what is your risk profile? Only because small cap funds are likely to deliver higher returns, but if your risk appetite does not allow you to invest into something that will see a significant drawdown, then you are not the right investor for that fund, or fund is not the right fit for you. The second point, as we mentioned, risk appetite. And the third point is asset allocation. So within the equity also, you have multiple categories of large cap, mid cap, small cap, multi cap, flexi cap, thematic, and whole other bunch of categories. Once you decide based on these factors, once you decide, hypothetically, suppose you are an aggressive investor, if you want to invest 80% into equities and 20% debt or other assets, within that 80%, then you have to make space for large cap, mid cap, and small cap allocation.
All right, take that point. Gentlemen, we have to slip into a short break, but we'll continue this interesting discussion with both of you on the other side of this very short break. Stay tuned. Welcome back to MF Corner. Still have with us Amol Joshi of PlanRupee Investment Services and Trideep Bhattacharya of Edelweiss AMC, and we are discussing all about investing in small cap funds. Mr. Bhattacharya, let me come to you now. We've seen these waves of movements in the small cap category. So how have these funds been traditionally placed, say, versus mid caps or large caps when it comes to returns? And do you expect that volatility to continue maybe for a year or two?
I certainly think the volatility would continue for a year or two. And hence I said that for small cap investing, we need a seasoned investor or an investor with a very seasoned equity-oriented mindset, a long-term time horizon, and a bit of appetite for risk. But if one has crossed those through two barriers, then certainly the returns are generally higher than what we see in other asset classes or other market cap classes overall. The other thing that we find which is unique to small cap is the diversity across various different sectors. Diversity that of small niche or investing in niche elements of the market that one can kind of go through in the form of small cap investing is generally not available for given the SEBI classification from other shares of investing as well. So if one is looking to create alpha over a slightly longer period of time, i.e. 3 to 5 years or even longer, and has for risk, then the corresponding returns are generally higher than that of other categories like mid or large cap.
All right. So if you're looking for, serious alpha generation, then you might have to look beyond the index and then look at small and mid caps as well. Amol, let me come to you now. You do have some interesting data as well, right, on how the large caps have fared versus the small and mid caps. So you want to take us through that just in terms of what historical returns have looked like?
Right, certainly, Pavitra. So over last 3 years, Nifty or large cap universe has generated a CAGR of 25%. Compare that to its mid and small caps. Mid caps have done about 33% and small caps have done about 36%. So small caps have done very well over last period. There is some benefit of doubt that we have to give to equity over here, because when we say 3 years, we are actually counting from the COVID crash. So let's cut to 5 year and 10 year. Over last 5 year to 10 year period, large caps have delivered CAGR of 10% to 12%. 5 year is 10% and 10 year CAGR is 12%. Now compare that with mid caps. Mid cap has delivered between 12 to 18% over a 5 year and 10 year period. And small caps have even better compared to large caps and mid caps. The 5 year CAGR of small cap category as such is 13%, and 10 year is probably spectacular returns of about 18% or so. So at this point, again and again, one must reiterate and highlight that small caps are definitely capable of generating or adding alpha to your overall portfolio, but you should be extremely patient and long-term investor. If you get a chance or opportunity, like we mentioned, COVID crash in between, when valuations are exceptionally lower or exceptionally lucrative, mouthwatering, in that case, you can take lump sum exposure, but otherwise, the measured exposure across a length of time is the right time, or right way rather, to invest into small cap funds.
Okay, so that's the consensus view that yes, returns are higher, but risks are higher as well if you want to invest in small cap funds. Mr. Bhattacharya, that takes me to the next question. Suppose an investor has 100 rupees to invest. How much of a proportion should go to small cap funds? And if not investing via small cap funds, how can investors take exposure in this category?
So I think it's a great question, but giving a straight answer which is applicable to all is probably not the right thing to do. I think the right answer to this is that it's got to do to be dependent on the risk appetite of the investors, the risk profile of the investors, which is best judged by the advisor he or she speaks to. But certainly, if you look at the core and the satellite allocation of an investor, the small cap fund would probably fit more into the satellite part rather than the core part, because this is where he's looking to generate more alpha and is prepared for more volatility overall. The second part of the question that you asked, that if not directly the small cap funds, how to sort of get still the small cap exposure. And I would point investors towards the mid cap funds. Now, as per SEBI categorization, 65% of the overall investment has got to be mid cap funds, but there is this remaining 35% bucket which the fund manager can allocate it to small cap securities as well. And fund managers do a good bit of allocation from that standpoint. So you have an exposure to mid cap, which is probably slightly low the risk spectrum, and also you have exposure to small cap names which are higher on the risk spectrum but have higher growth rate. So you get a good concoction of both. So in a nutshell, mid cap funds are another alternative that investors could look at if they are looking to take a risk-adjusted bet on the small cap segment.
Okay, so you don't have to directly go in for just a straight up small cap fund. There are other ways to get that exposure as well, and maybe somewhere moderate your risk. But on that note, Mr. Bhattacharya, Amol, thanks a lot for joining us today and taking us through that complete masterclass on small cap funds, how you can go about investing. And Sonal, like you were pointing out at a time, you know, when inflows have been so strong, it's fully understandable, right? The market is so range bound, so just looking for opportunities outside.
Oh yes, people are doing that. So we'll see whether that continues or not. But for now, we'll leave on this edition of Mutual Fund Corner. Stay tuned for Closing Bell to take you through the last hour of trade.